Hello, good afternoon, everyone. Today, a very special edition of the Final Bar. We're going to be breaking down investment routines. We're going to be hearing from my friends Ralph Acampora, Boley, also Grayson Rose, and I'm going to share with you some of my thoughts about how you build a decent investment routine. Making good decisions with your investments is all about having a consistent investment routine, how you go about the process of seeing what's happening and getting yourself to a point where you can make good decisions with your investments. So investment routines today, this is the Final Bar. Hello, everyone. Welcome to the special edition of the Final Bar. My name's Dave Keller. I'm the Chief Market Strategist here at StockCharts.com here in Redmond, Washington. Thanks always for joining us on the Final Bar, and thanks for joining us for this special edition. We're on the road this week and thought we would put together some of the interviews that we've done recently and on a particular topic. And today we're going to go through investor routines because I've been able to talk through my career, over my career, with a lot of different professional investors, individual investors, and the people that I respect and have learned the most from. What strikes me is that they all have good, consistent routines. They have a process that they follow consistently, and it'll change over time. It'll evolve as the markets evolve, but it usually is pretty consistent. And I had the chance recently to sit down with three really capable investors. One is Ralph Acampora, second's Boley, and the third is Grayson Rose. I was able to ask them questions about their own routines, their own process about how they go through things. So today we're going to go through each one of their discussions. First, I wanted to challenge you with some of my own thoughts about investment routines. One of the things that I've always asked people is, what is the very first thing you look at in the morning? And when you're thinking of a technical discipline, when you're thinking of charts, when you're thinking of visualizing the markets, what's the very first thing you look at in the day? And what I've often found is that there's a disconnection between what you look at first and what should be most important to you, right? So most of us, I'm sure listening today, are more on the long-term side, more long-term investors. Some of you may be shorter term, that's fine, but on average, we found our users are more longer-term oriented. So the first thing you look at should be in tune with your investment time frame. So if you're a long-term investor, make sure you're priming yourself by thinking about long-term price behavior. So in this case, I'm actually looking at a weekly chart of the S&P 500. This is actually my desktop. This is how I use stock charts. And as you can see, it's a bunch of Chrome tabs, which I'm learning Chip Anderson, who runs stock charts, is not super happy with how I lay it out, but that's okay. It's a really good way for me of just, jumping really quickly between a lot of different charts and a lot of different perspectives. But the first one that I look at on the far left corner is a long-term weekly chart of the S&P 500, because regardless of what I'm seeing, regardless of what I'm thinking about the short-term price behavior, I want to orient myself to the long-term trends. So regardless of what's happening, all the volatility, all the flickering ticks, all the noise in the markets, that's all this tiny little bar on the far right side of this chart. The rest of this is this long-term trend from multiple years, going back to 2012, that really show you the trajectory of the market up and to the right, okay? So the long-term trend has been higher. This is the 40-week or the 200-day moving average, very similar, and the 150-week moving average. So at this point, the price is above two upward sloping long-term moving averages. The long-term trend is up. After I've sort of qualified that, understood that, started with that point, then I'll look at the daily chart and I'll see how today's price action, the action of the last couple of weeks, fits into that long-term trend. So once I understand the long-term trend, I review and reflect on the fact that the trend has been up. I now look at the short-term trend with that big picture in mind. Now I start to see the volatility that we've looked at in the last couple of weeks. I can see how the market has been relatively choppy, continues to test new lows and then new highs. A lot of stocks in a similar type of equilibrium, right, in some sort of range. And so now the range that we've seen over the last couple of months really makes sense when you think of it as being toward the end of that long-term uptrend that we've been tracking for years, right? So this volatility, this choppiness fits into that long-term trend. Then I will then go through the daily chart, or the last 5 days, and look at today's trading and how it fits into the last 5 days. So in those first three tabs, I basically started with the last 7 years, then looked into the last 6 to 12 months, and then finally I'm looking at the last 5 days. So What a lot of people do, I think, unfortunately, is they start with the current price action. They look at something like this, the market summary page, which again is a really important page I'd encourage you to use all the time. But later in your process of a daily, weekly routine, you want to start with the big picture and then get to the point where you're understanding some of the short-term dynamics. Once I've started with that and sort of got a good real long-term feel for the markets and a short-term feel for how the trends fit into the long-term picture, then I go through a series of visualizations that help me sort of understand all the different time frames. So I look at a series of candle glance pages that for me break down what I'm seeing across different markets. So thinking as an asset allocator, thinking big picture of all the places I could go, I want to start with the broad equity indexes, look at things like large cap versus small cap. One of the places my eye always goes down to is the S&P 100, the S&P 400 mid caps, and the S&P 600 small caps. What are the largest companies, the mid-size, and the smallest companies, and how are those trends related to one another? I then like to look at some of the global markets. So here I'm looking at the US versus EFA versus EM. And so I'm looking at global equities across the board, trying to see how the patterns are moving relative to one another. Here's where I like to break down movements in China, India, Europe, and sort of understand the news flow that I'm hearing, the stories that I'm hearing outside of the chart world. How is that manifesting itself in the charts themselves? Then I will go through things like non-equity asset classes like interest rates, gold, commodities, and so forth. Then I'll flick over and go through some of the breadth measures. And from here on out, I'm really digging into the equity space in a lot more detail. So for me, understanding stocks is a three-step process. Number one, the long-term trend in the major averages. That's what we started with. It's then breaking down those averages by looking at some of the sector style cap themes, and that's kind of the phase we're in here. So looking at market breadth, looking at volatility, looking at different sector themes like the performance within the consumer space, relative performance of semiconductors, and so forth. And then finally, once I've done all of those things, I'll start to look through individual stocks. And what's important to remember is the individual stock work, when I'm looking at scooter rankings and looking at what stocks are moving up and down, when I'm looking at sector rotations, that comes at the end once I've already sort of identified the big picture themes of the day. So that's a quick run through my process. And again, that's a quick summary. There's obviously a lot of moving parts I wasn't able to get to, but that's sort of my daily routine of using stock charts to understand where the movements are coming in the equity space. I want to go next to Grayson Rose. Grayson is one of the the upper management here at StockCharts.com in Redmond. He trades on his own. He's written a number of books on investing using technical analysis. Really knowledgeable guy, knows his stuff. And I was able to sit down with him recently thinking about his process. What struck me with my conversation with Grayson is that he quickly went, when I asked him what his routine was, instead of thinking of a daily routine, he talked about his weekly routine. He talked about how he used Sundays, taking a step back when the markets are not open, when the markets are closed, when you have a chance to sort of reflect on where things are going. And that's where he does his really meaningful stuff. And he points out that if he misses that time on Sunday, the rest of his week is a lot less productive as an investor. Let's hear from Grayson Rose.
I'd like to stand up at seminars and things like that and create some drama in the room by saying investing is not difficult. What is difficult is maintaining a set of routines and having the discipline that you need to follow those routines day in and day out, week in and week out, month in and month out.
Yep.
That to me is what makes investing really difficult. There are so many tools out there, so much educational content. You got great guys like you on StockCharts TV every day sharing their thoughts on the market. There's so much content and instructional things and helpful tools out there to make you a better investor.
Yeah.
What there is not out there is something that keeps you disciplined and focused on the markets and executing your routine. So
right.
to me, that really is the secret to success. I am a big fan of weekly routines. I have a set of daily routines that I run through as well, but it's mostly just kind of watching things. I've got some scans that I run every day. I run a new 52-week high scan every day, right at the close, just because it's great to keep a running list of what's making new highs, and I love to sweep that. But basically at the close, I start looking at what the markets did, what the sectors did. I've actually got a little bit of a spreadsheet that I keep to sort of rank the sectors, which is fun. And then I just run through the stuff that I own in different portfolios, and that's really it on a daily basis. I've actually gotten away over time, partially because I work here and I'm busy, I got stuff going on. I'm human. I've actually gotten away from a lot of the sort of active analysis during the day and watching the intraday charts and things like that. And I've moved a lot more to weekly routines. So for me, I've got this very clear set of weekly routines that I run through every Sunday. It's a religion. I got to do that on Sunday or I've totally failed for the week. And I actually sort of track this, use this app called Streaks to sort of track how many times in a row I've done my portfolio review to keep me honest and everything. It's fun. Okay. But I actually had that up here. Let's see if I can bring it up. This is basically it. I mean, this is my set of weekly routines that I run through every Sunday. I use an app called Workflow. I showed Dave this before the show, and he thought it was really cool. It literally allows me to make a checklist, and I can check these things off. You can see I'm kind of halfway through it. I've done the important stuff, and then I've got to go in and do the fun stuff of finding new stocks and seeing what's making new highs and things like that. But that's it for me. It takes a couple hours on a Sunday morning. It's great to wake up, have a cup of coffee, and those routines are basically run through the market from the top level down, from the highest level, down through the sectors, down through the industry groups, review the stuff that I own, go through my watch lists, run a couple scans, that kind of thing. But it's really market down into my portfolios, review that every week religiously. And one thing that's important for me too is that I'm really looking at the same charts every week. So I've got this set of about 11 charts that I use to kind of gauge the market. And it doesn't cover every single corner of the market, but what it does do is I've got 11 charts that I'm looking at every single week, and every single sort of change that the market makes, most of them are covered in that 11 to some degree. And by watching the same charts every week, I can over many years, I've been doing this for a long time. I really know the moves that those charts make kind of intimately. So the fact that it's the same set of charts every single week is what really makes it powerful for me. But it's come down to a lot of weekly routines. It's this kind of dedicated Sunday portfolio review.
Right.
That's really important.
There is so much fun to unpack in what you just said. I hope everyone listened to that because that was really, really cool. I mean, there are a lot of really good points in there. The last point you made, which was looking at the same charts every week, that is such a great point. And I know from my previous role managing professional analysts, when I first started to get to know their routines, every single, and these are people that are successful, for years, have developed these great routines. They all had a stack of charts, some of them on the screen, some of them just paper that they would flip through, but the same way, the same seat, the same thing, and they would do it. And they knew those charts intimately. Yeah. I mean, they knew exactly what was coming. If you asked them, they knew it. And it was just because of that routine. And if you got out of that routine, you all of a sudden were just one level disconnected from what was going on. So that's a really cool one. There's so many other things to unpack there, but the one that strikes me is just using a checklist like that.
Yeah.
I use an app called Asana, which is kind of a similar thing. It's more of like a task management thing, but boy, it's the same thing. It's like every week I know on Monday, these are the things I'm going to hit. Yeah. But the best thing I feel like that you mentioned, all of those things are meaningful. The fact that you don't look at things as much during the day, it's almost a blessing that you have a day job because you're not tempted to pay attention. Right. I mean, can you talk a little bit more about that? I mean, the value of not staring at things tick by tick and sort of trying to digest the intraday action versus having more of a regular time when you come back and just check on where things are at, right?
Yeah, I mean, markets move in a healthy mix of rallies and reactions over time. Over a long-term weekly chart, let's say, it's supposed to move in a healthy mix of up and down. And stocks are the same thing. They're supposed to move in a healthy mix of up and down. They're not supposed to go up every single day, not supposed to go down every single day. And so by sort of sucking yourself back one level from the day stuff to a weekly view, not necessarily looking at like weekly bars or weekly candlesticks or anything, you can still look at the daily charts, but to sort of suck yourself back and say, I'm not going to be as sort of overly focused on what's happening today relative to yesterday. For me and for the time frame that I trade and invest over, that's incredibly powerful because otherwise you start getting sucked down into this. Oh my God, it's down 2 days in a row. I'm getting really worried. I got to sell it, and then you make a mistake. And it's all time frame dependent too. I mean, I'm speaking as someone who's trading primarily 6 to 12 month positions. Right. I'm not getting in and out of stuff in a week, so that's important. I hope everyone hears that. I'm giving you one perspective with one time frame and one sort of risk profile and everything like that. It's very specific to me. But I think that concept applies to a lot of people.
All right, so that was a great conversation with Grayson. Again, just one little snippet of that, talking about his routines. And what I loved about it, again, was the orientation to a weekly routine. I think a lot of times we think about our process and we think about a daily process, right? A daily routine. What are we going to do every day? And that's very, very important. But he reminds you, as a long-term investor, you really want to be orienting more toward a longer-term time frame. And again, not worrying as much about the noise during the week, a lot of times can be kind of a helpful routine, right? Just to get away from the market volatility and focus more on the long term. So great thoughts from Grayson there. Next, I sat down with Ralph Acampora not too long ago, talking about his process. Now, this is someone with 50 plus years in the industry. He's had a great career. And it was really interesting to hear how he's used technology more and more over his process. So he shared some thoughts about what he does during the trading day to sort of track all the movements that he's seeing relative to what he's seeing on the charts. Let's hear from Ralph Acampora.
Can you just talk about, like, when I would ask you about your routine, how would you describe your market analysis routine at this point, and how has that evolved over time? So if you're going to get started, I'm looking at where things are at. How do you kind of go about that? What's your routine look like?
Well, I get up in the morning, of course, I'm listening to all the talking heads on television. Just kind of get a flavor of, what they're saying and what they're thinking, kind of like a pulse beat of sentiment, if you will. And I have a spreadsheet. I'm an old timer now, okay? I have a spreadsheet that's hooked up to my Reuters system. And what I do for all the S&P stocks, S&P 500 stocks, I do it for all the ETFs. I love ETFs because it's, you get 10 of them and you get all the sectors and everything, and a couple of them you get all the European markets and everything. With a handful of ETFs, you can literally follow the world, literally.
Yeah.
And what I do is I input onto my spreadsheet all the support, minor, major resistance, and trends for every one of them. Plus, I have the system, of course, it's calculating the moving averages and RSI, whether it's overbought or oversold. And I sit there and just wait for the flashing signs. Red was obviously breaking support levels or breaking trends, and green is obviously breaking out resistance, moving up or hitting my targets. And I can literally say this, David, nothing moves in the world without me seeing it. That's what I do, and it's probably the most basic and the simplest way of looking at things. I literally look, whether it would be candlestick charts or regular bar charts, and I draw my trend lines. I mean, I'm a big trend follower. I mean, they all say trend's your friend, and all. It really is. And I like the RSI and I like MACDs. I like them on a weekly and monthly basis. Daily, I get too much noise. I'm basically, in all my careers and all the big firms that I worked for in Wall Street over the years, I was always asked to write a market letter that looked out into the future. Mm-hmm. In other words, at Christmas time, all my clients had my 20-page report under their Christmas tree. And they could read it and see what Ralph's long-term opinion is for the new year, for the coming year. And I get upset when people say to me that technical analysis is for traders only. That's nonsense. You can use technical analysis for long-term opinions. And then my weekly letters would be updating that opinion. I'd say we're on course or have to make a little adjustment. And so that's what I do.
That's great to hear, especially with your use of the spreadsheet that you described, because I have a lot of people that I talk to that either do things very manually, like they have a very traditional process, mm-hmm. or they're doing mm-hmm. something very systematically, very quantitatively, and kind of going all into some sort of model. And you're kind of in the middle, which is it's a subjective approach, but you're leveraging some computing power to surface some of the things that you should pay attention to, which is really, really cool. I like
absolutely, that. Yeah. Thank you.
You mentioned a little earlier in the beginning of your process, first thing you do is flick on the TV, listen to the talking heads, see what people are saying, just to sort of get a read on, the overall sentiment, what's happening. Now, you've been involved in media for a number of years. How have you seen the treatment in media of technical analysis or market analysis? How has that changed over time? And what do you think now in terms of social media and all the newer ways? I know you're active on Twitter and other places. How do you think that's sort of evolved the world as well?
That is an absolutely wonderful question. And I say that sincerely. I turn on the TV and I listen to all these talking heads. Now they're talking about Fibonacci, Liberace numbers. They're talking about moving averages, and I'm happy to hear that, but I'm scared to death because the viewing audience that has no idea what they're talking about. Because that's where the education comes in. That's where we have to educate people. Got to get that CMT designation because that's the one that'll force you to read all the right books. And so we've come a long, long way. Trust me. And 52 years ago, when Johnny and I were walking around, we were angry because the fundamental analysts wouldn't even talk to us. And now they're starting to, you can hear mumbling coming back, and that's kind of interesting. But it's, as I said, it's the lack of the education that really, that's where we have to do. So that's where the CMT organization is really at its best to bring the subject to people. That's what I hear. Yeah.
I think one of the most dangerous things is people that think they've learned everything there is to learn. Because I think you've pointed out that I think one of my favorite things about this industry and about this discipline is that there's always something additional to learn. The market's always evolving, right?
That's what's so wonderful about the whole business. Every day is different.
So my conversation with Ralph Acampora was fantastic, and I loved his advice that he gave to novice investors, people just getting started, which was, it's not easy. There's not one thing you can find. It's always a process of learning, and I would hope using the routines that we're talking about today over time is what helps you to build up some good routines. Good habits start with really good process that you just start to repeat every time and improve over the long term. So really good thoughts from Ralph there. My next conversation was with Tom Boley. Tom is one of the fellow contributors to StockCharts.com. He's a really savvy user of the product, of the platform, and knows the charts very, very well. What I loved from his conversation was a focus on his daily process. What does he do during the trading day? Tom's a little more short-term oriented, so I love hearing from someone like that about how he tracks movements during the day, how he uses scans and charts during the trading day to make sure he's not missing any opportunities and leaving them on the table. Let's hear from Tom Boley.
As soon as the market opens, I'm in here and I'm looking at that intraday. I want to know what is leading the market. I see materials up, and the first thing I do is say, all right, what's the dollar doing? And I saw today the dollar was up. I'm like, okay, materials probably not going to last. I know it's an underperformer. I could care less. Technology. Okay, market breaks out. I want to keep an eye on technology. What's leading? Well, if you click on technology, it tells you what's leading. Computer hardware, semiconductors, and then I can look at some of these groups, and I already know which industry groups I'm interested in keying in on. But I could go over here and just quickly take a look at the chart. All right, that one's dropping. That one's been dropping. All right, nothing looking very interesting here. Well, the computer services trying to rebound a little bit. Telecom, nice bounce there, even though technology and many of these industry groups have been going lower. Well, I know what the news is there. Cisco came out with their earnings. Look at software still outperforming. So yeah, software is down a little today, but this is still one of my favorite areas. But just clicking on the sector summary and then drilling down to these different areas can give me a lot of information about the market. All right, and then finally what I get into is I run scans. So if I go in here, let me show you a couple of scans I ran today. And I run just about every day. So I already have scans saved. First one I'm going to do is this 10 a.m. high volume. I'll show it to you, but I'm not going to run it right now. And the reason, well, all right, I will go ahead and run it. All right, 80 stocks in my strong earnings chart list, but my scan was anything over 40% of their normal daily volume. Now, I like to run this scan at 10 a.m. Eastern because you're only 30 minutes into the day. If I run this scan now, the problem is that most every stock, many of the stocks are going to be over 40% because I'm at the halfway point of the day. So that's why I have so many of these. So instead, let me go back and I'm going to pull up my 1230 scan and I'm going to edit. So now I've got, you can see this one is set up at 7.75. So now if a stock in my strong earnings list has traded at least 3/4 of their normal volume by essentially the midpoint of the day, that's more than normal. And maybe something I want to kind of focus in on. So let me run this scan, see what's going on. Now I have a manageable list, 14, and these are all trading more than normal volume. If I pull up the first one, check this one out. And you know what's killing me about this stock? John Hopkins and I were talking about the 3 portfolios that were mentioned, that we discussed in the webinar that I did at Earnings Beats on Sunday evening. I had 2 bios. I had 2 biotechs in my aggressive portfolio. This was the other one, and I took it out. And the stock is up 19% today. But the reason I liked it was, first of all, it had been declining, but the group had been declining. Look at the relative strength on Array Biopharma. My point was that these biotechs eventually are going to catch fire, and when they do, you want to be with some of the leaders. Well, why has this stock been leading? Well, I can tell you why. Because they came out with news today, positive results from their colorectal cancer treatment therapy. Now, I don't know if there's insiders that already knew about the fact that, this was probably going to get approved. Maybe it's just because of the potential of this particular therapy. But for whatever reason, Array Biopharma was trading well above its biotech peers. And now today we get news and the stock up 19%. Of course, I don't own this one. That shouldn't be a shocker. So if I go back to that list, so there's Array. Cirrus Logic, I don't know what the news is here, but I can look at this one real quick. The scooter's only 44. I think it's maybe just a little bit of a rally off of, or at least an earlier rally off of some heavy selling to the downside. This is in that semi space. And I'll tell you right now, outside of maybe 1 or 2 AMD, maybe 1 or 2 others, I would stay away from the semis. And if the ones I was trading break down, no excuses, keep your stop in play. That's the way I treat these kinds of stocks. But another one on here was MRCY. Remember I mentioned earlier that they had the secondary price offering or secondary stock offering? Well, the stock went all the way down. And so if I didn't already know the news by running the scan at 10 o'clock, I would see heavy volume coming into the stock. I'd pull it up and I'd go find out what's going on. So it just alerts me to different things. And it might be a trade. I mean, this is a nice recovery. By the way, here's a stock that had a secondary offering after it came out with earnings back here in February. Next day, this is what I was talking about. You get earnings, get everybody jumping in. Next day, they come out with their stock offering. Didn't really hurt the stock. It just, you can see the sideways action for a while, and then it resumed its uptrend. But now I think that it's up to these stocks, especially if it's a lot of, if it's a lot of dilution. I think it's up to these companies to prove that what they're going to use the money for is actually not going to dilute earnings. All right, almost done here. Actually, what I'll do is go back to the scan, because you can see these are the other stocks. You know why T-Mobile's on here. So those are stocks that just kind of alert me to heavy volume within my watch list on that particular day. But anyhow, that is in essence kind of how I approach the market every day. So here is my summary. You can read through the summary there.
So Tom did such a great job of describing how he uses scans and follows the charts during the trading day. And again, what I loved about some of these conversations is from someone like Grayson Rose, who's more of a long-term oriented investor, thinking about his weekly process, how he spends time on the weekends when the markets are closed to make sure he orients himself effectively. Then you have Ralph Acampora, someone who's been doing this for decades, thinking about how he follows stocks and how he makes sure he doesn't miss any important movements. Then you have Tom Boley, who's more short-term oriented, thinking about his process of scanning and looking for ideas and capturing movements during the trading day so he doesn't leave the best opportunities on the table. At the beginning, I wanted to share some of my ideas of how I lay out StockCharts.com. What's my process of going through the charts in a systematic fashion? I hope these ideas have helped you think about your own process. And again, the best investment processes start by gaining what you learn from others and then getting into some good habits on your own. For the Final Bar, this is Dave Keller. Have a great day.
Julius Acampora.
And I'm Arthur Hill, and you're watching SCC TV.